All right, here we go. We're going to keep going. I had to eat with my family, but now I am back, and let's just keep going. We were 33 minutes into episode 7. By the way, my laptop died, so that is why the whole stream stopped. But anyway, now we are back. I'm going to keep going where I left off. Then we'll go to 8, and then 9, and then 10, and then... Guys, I'm going to be here. I'm not going anywhere. If you guys want to watch with me, feel free. But I just feel the need to have watched like every single Ice-T video that exists. So, because of that, I'm going to be here. So you guys can watch with me or you don't need to. It's up to you.
Okay, that's not market replay. This is a young man that has taken out real money. And the companies are diverse. They're not just one company. So you can follow this young man here on Twitter. And I think he has a ever-growing social media platform.
Dude, I am back at it again, Haney. Dude, I'm not going to stop. I don't care. I'm going to watch every single video. I'm going to watch every single Ice-T video until I can say that I've watched every single one. Because guess what? I want to be that kind of trader. I want to be that good. So, yeah, I was just talking about it, but my laptop died, and then I went to go eat with my family, and so now I'm back. So anyway, I'm going to keep going. I'm going to be here for quite a while. Feel free to watch as much or as little as you want, but I'm going to be watching, so.
I know, see, he does. I don't do Instagram, but here's his Instagram. But this is his handle on Twitter, so if you want to follow him, he's trying to make an attempt to grow himself. But if he's doing things like this consistently and doesn't get excited and lose his mind about it, I think he's going to be somebody to watch in the future. And it's been my pleasure and honor to have a very small part in guiding this young man. And like I said, there's a lot of these types of folks in my fold. They just simply don't want to come out there. This is not to ask all of you to come out there. Okay, I'm not trying to do this, for everybody. Because if you're able to do this, you will be seen. People will take recognition of you and they'll see it. Okay, and there's nobody can talk this down. There's no way anyone can look at this young man and what he's been able to do. And you're probably looking at this like, what's the deal?
There's a lot of people like this.
But he has
just
done
this guy.
Several things with funded accounts and things. And I personally, I don't understand it all because I've never done a funded account. I've never done any of those types of things. But this is the tweet I was looking for. So these are all his payouts.
That's sick.
And the things that he's done over the course of his journey with all this content. And to me, I think it's fabulous. I think it's amazing to see something like that. Hi, woman trader.
That's cool.
Oh, my name's up here. So the topic was this young man last night. My wife and I, my kids, we were all talking about him. And I think that it's
he's a 7-figure funded trader. Dude, I got to make sure that I don't lose my accounts. Because right now, I'm funded $700,000, but I'm close to losing a decent amount of them. So I just got to make sure I don't lose them. I want to be able to say I'm a 7-figure funded trader. That would be so cool.
It's a wonderful position for me as a person that came up from nothing. Like nothing. I didn't come from money. And to see a young man like this, carve out returns like this is just very, very inspiring. And I know that some of you would like to see this, and it'll encourage you because the folks that don't like what we do, the folks that don't like me, they're not going to like this, okay? Because it's something that they can't knock it. And when you make your own results, okay? And I have students that are making $10,000 and $5,000, $20,000, $15,000. When that happens for you, there's no one out there, not your friends, not your family, not your coworkers, nobody on the internet, no other influencer or clout chaser or competitive, other educator type person out there that's just spending too much time trying to well up drama and not build their own brand up, trying to tear someone else down. When you have this much evidence proving that there's people all over the world using the very things that you're trying to learn right now, and they're making real money, they're doing it with themselves, doing it
people
exactly how I taught it. To me, that's undeniable proof. That's proof. And if I was being honest with you, I would love if all of my students would come out here and do like this young man's doing, because I have some pretty heavy hitters that are doing extremely well. But they all know that social media being what it is, it's very toxic sometimes. And I have a cloud that follows me all around because here I am, I'm doing everything for free. I'm teaching Forex, I'm teaching stock index futures, I'm teaching stocks, I'm teaching everything for free. And people all around the world are taking the information and now they're making real money with it. So how are these competitors going to view me? Any chance they have to say something negative about me or my students or their opinion of you wasting your time, they're going to try to do that. They're going to create stock public accounts. They're going to encourage their members to go out and try to just well up all kinds of nonsense just to make you doubt doing what this young man and many of them out there on Twitter and in my own personal mentorship group, people out there are actually doing well with this. Think about it, folks. What would $250,000 do for you? What would it do for you as an individual? Any age bracket. I don't care where you are.
This is going to be us.
If you're young or old, middle-aged. $250,000, folks, is $250,000. That's life-changing. And for some of you that are in certain parts of the country, a $250,000 investment return like this on something that you learned from YouTube, you didn't have to give me anything. No PayPal, no credit cards, no Black Friday coupon codes, nothing. It's just simply roll your sleeves up, do the work, submit to the process, and wait until the results come. And don't take anybody's advice about not doing it. Because these people, they can't do what we're doing. They have no idea what they're doing. They're doing trades. They're not using stop losses. They're over leveraging. They're trying to make money, forcing things in the marketplace, looking at things that don't exist in an algorithm, harmonic patterns, animal patterns, Elliott wave. Those things are not algorithmic. No matter how many times someone says they are, they're not. So I tossed this out there. I asked the young man for his permission if I could do this. And to me, I think it's, as a mentor, I'm encouraged because it's just really nice to be a part of it. And I'm not trying to say I had, anything beyond the fact that I taught the concepts and he put all the work into it. And I had a very, very small role in that. And any accolades he gets from what he's doing are his. He earned them. And I think it's just a wonderful thing to see a young man like this. And it makes me think of myself when I first came up. And I'm quite certain, if you listen to his interview on The Funded Trader, I left a comment on that video. Some of you probably see where I post comments because you're subscribed to get all notifications. But he has a little bit of a storyline that he talks about his family and such, and how his parents want him to go to college and things. And I hope he continues to do well before his parents find out that I was a catalyst for him not wanting to pursue a lot of that academic thing. But moms and dads out there, if you're listening and you see your children do very well, just know that I've always felt strongly about this. And I know that there's a lot of family elements all around the world that have a high opinion of universities and college degrees and such. I'm just simply not a proponent of that. So I believe the young man has done well so far. And if he doesn't lose control of himself and he just stays focused, the sky is not the limit. So, Paladin, I'm very proud of you.
That's awesome.
And I'm actively looking forward to seeing what you do going forward. Hopefully you found this insightful and encouraging. Until next time, be safe.
Episode 8, let's go.
All right, folks, welcome back. This is a short little video on Forex. I promise not to keep it too long. We are looking at the daily chart of the dollar index, and I shared some charts on Twitter and gave you some levels, and that's what we had. And you can see we did, in fact, trade down into the sell side liquidity, into our fair value gap in the form of buy side imbalance, sell side inefficiency, busy. So that's where our levels are. Everything will be linked to this logic on the daily chart. Hourly chart here, you can see opening price on this candle here for the 9th of September 2023. Sell side liquidity pool, relatively cool lows. The market's going to open, rally up, sell off, down into our fair value gap on the daily chart. All right, on the 15-minute time frame, you can see buy side liquidity here, sell side liquidity here during the London session. Okay, so midnight open candle right there, opening price extended through. If we're bearish or looking for lower prices, that means it is a risk on scenario, and dollar if it rallies.
Midnight open, that's this line right here.
So it'll take out buy side or trade into an inefficiency.
Manipulation above midnight open, distribution lower.
In the form of CB or fair value gap. The market trades above, takes out buy side liquidity, attacks the sell side liquidity here. New York open kill zone, which is 7 o'clock to 9 o'clock in the morning, New York local time. You can see we had a drop in here. We'll take a better look at that when we get into the 5-minute chart next. We had a really nice CB here, sell side imbalance, buy side inefficiency. Notice that this line here is that old, relatively cool low on the daily chart. And then we have it here as well. The retracement does not come back up to the daily old lows and does not come back up to the old lows here. So support and resistance, this is why I don't like it. It fails. But if you take my CB, sell side imbalance, buy side inefficiency, here, it trades up to consequent encroachment, which is the midpoint of that. Okay, this is a gap. It trades up into that. Fails to make a return to old daily lows and old equal lows over here. So this is where you would expect the algorithm to kick in. It does. Sells off. Trades into the daily fair value gap on dollar index. And it closes the session, making the low of the day. When you know it, right at the end at noon, London close kill zone. 5-minute chart. Here's that New York open kill zone. Starts the day here. Breaks down from high to low. Short-term shift in market structure. Fair value gap. What is that, folks? That is your model from the 2022 mentorship right here on this YouTube channel. Sell short in here.
There we go. You hear that?
Let it rip.
You hear that?
Short-term shift in market structure. Fair value gap.
Sweep. So we swept out these highs up all the way up there. Well, actually, let's rewind this real quick.
Skill zone. 5-minute chart. Here's that New York open kill zone. Starts the day here, breaks down from high to low, short-term shift in market structure.
Anyway, break of structure for value gap forms, and then we get distribution down to these equal lows. 2022 model, very cool.
What is that, folks? That is your model from the 2022 mentorship right here on this YouTube channel. Sell short in here, stop above this high here, let it rip. Relative equal lows, the daily sell solid
I'm gonna record that once.
Today here breaks down from high to low, short-term shift in market structure. So everybody got what is that, folks? That is your model from the 2022 mentorship right here on this YouTube channel. Sell short in here, stop above this high here, let it rip. Relative equal lows,
awesome.
the daily sell solid liquidity pool, which is this level here, and then the fair value gap down here. And where does it turn? Again at noon. Exactly how I teach you in the core content and on this channel. Moving on over to euro dollars, our daily chart here. These are the levels I gave you on Twitter. If you're following along on there, I suggest you do that because otherwise these videos are going to seem a little disjointed. So we have buy sell liquidity here, an old high back here, we're looking for that as well, and a fair value gap. Right in here, it's traded up into it and then we consolidated intraday and rallied up into our buy sell liquidity pool pair. Here is the hourly chart. You can see our order block here on the 8th. We drop down into that, rallies away. And that's the extent of what we're going to
look at how tiny this order block is.
Refer to it over here. So prior to all this consolidation, this down close candle, the opening price, extend that through. You can see the market starts to respect that and rally up. More specifically, on the 15-minute time frame, euro dollar had a sell side liquidity pool here.
Accumulation. Look at how obvious this is, guys. Accumulation, manipulation, distribution. I bet you there's a flow state within here.
But if you had this one and not this one, don't be discouraged because either one's correct. But I like this one because my eye jumps right to these levels where candles get real close to being equal.
Yeah, I'm taking notes on my phone, so I'm just putting my notes. As he says something, I'm just putting notes in my phone. I'm not taking it like I'm not using a specific application, but yeah, I'm also just trying to keep it in my head because I feel like, you know, the more I can like actually remember everything, the better, but I am taking notes on my phone.
Whether it be the highs or the lows, my eye just goes right there. Over time, training with me, you'll adopt that same skill set, and it'll just be like second nature. So the market drops down in London, open, rallies back up, takes out buy side, expands, small little retracement in, and rallies up, creating the high.
Look at how beautiful this accumulation, manipulation, distribution is. I mean, this is totally algorithmic. Accumulation, manipulation, distribution. I bet you this was like a 15-minute gap right here. This is probably a 15-minute gap. We sweep out these lows. And then within here, we get 1 minute changes to delivery, and then you can just take this up. Those 15-minute gaps with those 1 minute changes to deliveries for flow state, they are beautiful. Beautiful.
Look at
Use Obsidian. I'm going to have to look into it, bro.
on a 5-minute chart. We have the London open kill zone, 2 o'clock to 5 o'clock in the morning, New York local time. Sell side taken, rallies up into 7 a.m., beginning of New York open kill zone. Okay, that's this little rectangle here highlights exactly when I'm looking for a setup to form in Forex for the New York session. Between this period here and here is when I'm looking for a setup in London Open. And this is when I'm expecting the day to be completed. Okay, so the daily range high or low should be forming if it's going to be a trending day. If it's bullish, generally between 10 o'clock and noon, New York local time, it's going to create the opposite end of the range. So if we're looking for the low to form in London, which is exactly
so
how
yeah, for Forex, I think New York session's different. I think it starts at 7, but for indices, I believe it should start at 8:30 and go to 11.
Here's your low of the day forming. If we're bearish on dollar, that means we're bullish on euro dollar. We run up, small little volume imbalance in here, trades down into that, with a bullish order block right there. Rallies, retraces back down into order block as well. Ramps up through buy side liquidity, and this little exclamation point is for me to remind you that if you take your Fibonacci, anchor it to this low, up to this high, and use a 1.5 standard deviation. Okay, how do you do that on your fib? Just go to your fib settings and put in 1.5. And then when you drop this on this price in here, you'll get exactly the closing prices in here. You won't get the wicks, but you get the closing prices.
That's crazy. So using the 0.5s of the standard deviations is actually valuable.
Time. So we have time, which is when we close, 10 o'clock to noon, New York local time, and then price, which is this fulcrum point. When price runs through that, we don't know if it's going to go up there yet until it takes out this high. And when it does, we start doing standard projections on our Fibonacci, which is going to be standard deviation 1, 1.5, 2, 2.5, 3, 3.5, and so on, until it would meet a time window, like the kill zone here. So I want you to study how the lower they was falling
Guys,
on
I
the
need
kill
to
zone.
start adding the 0.5s. I think that would be useful for my standard deviations.
The continuation in New York open kill zone, and then the high of the day is forming in London close. And your homework assignment is to get to that closing price right here and the opening price with your fit between this low and that high, measuring that, and your projections will take you right into that right there.
Okay, we're
And
going
it's gonna
to
be a
go
project.
into
I'll
the
touch base with you later in
charts
the
right
week.
now,
It won't be every
actually.
day. As I mentioned, I'm doing a slow rollout with the Forex, but we will be daily every day starting on February 7th. Until next time, peace out.
I'm going to go into the charts, and I'm going to take a look and see examples of these half standard deviations working, because I'm curious. So I'm pulling over NQ. All right. And I also have S&P now on the bottom of the screen just to make things easier for me. So let's just look for 15-minute gaps and 1 minute change the state of deliveries. So what was I wanting to look at specifically? Oh, standard deviations. Okay, 15-minute for value gap. This is not going to take too long. I just want to see if the 1.5 standard deviations are any good. I'm pretty sure they are. Okay. Yo, wait. So I want to do negative 1.5. Not super relevant. It's fine. Let's just go back to the ICT video. Yeah, it's fine.
With the Forex, but we will be daily every day.
All right, there we go. Episode 8 complete.
All right, folks. We'll roll out with the Forex. All right, folks. Going long here. This is a review. This is actual time. I usually take these executions and speed them up and put them around 2 minutes long for Twitter.
All right, so what do we got here? What do we got? Can we reverse engineer what he's got going on here? We have kind of looks like an inversion for value gap. We got a sweep of this low, inversion for value gap. So I'm not exactly sure because there's not a clear break of structure. But for me, I would definitely take this as an inversion for value gap. I think this would be decent up to here.
Speed them up and put them around 2 minutes long for Twitter. Usually there's some kind of music over top of it. Just
this doesn't seem like a 2022 model though, but
I like my choice of music, but it's not for you, it's for me. So I'm going to kind of like walk you through this. Before I get into it, I outlined 40-30 as my level in the weekend commentary before we even started trading this week. And also I mentioned it as my focus point for this morning on Twitter. If you're not following me on Twitter, you can find the actual account on my YouTube channel. Go to the main page.
So we have a sweep. There's a low time frame break of structure, and this is a fair value gap. I'm pretty sure that's what this is. And you have an order block here and a fair value gap, so we should expect expansion higher.
See the official ICT Twitter account. That's how you get things alerted to you real time. Any level I'm watching that's pertinent, any draw on liquidity, something like that, change of schedule for live sessions and such. And I went long inside the fair value gap as it was approaching the middle part of that shaded area, and I'm placing my limit order up here as a best case scenario in case it was to wildly snap up there. I always like to use a best case scenario exit. And the 40-30 level, the reason why I like that, if you go to your daily chart for ES H2023, that is the closing price on December 14th, 2022. Okay, so open, high, low, and close is all you need. Add time elements and understanding about that, and specific macros that the algorithm does that delivers price, and yes, it does, and you'll see proof of that again here. And I sent 3 tweets out stating that the 943 candle, which is the shaded candle, big bullish green candle, that's the one I'm drawing everyone's attention to on Twitter. And then the down close that I entered on, that's an order block. So you can see already we have a potential volume imbalance forming where there's an absence of any bodies overlapping one another between 2 candles. So in my mind, I'm watching that form and I want to see it stay open. That gap between the present candles open and the previous candles closed.
This one.
Because if I can get a return back down into that, I'll go long additional contracts and pyramid my position up. I'm going to be aiming for about $10,000. All in one trade, build it up from one entry using the logic. Now, if you look at the 920 low, there's sell side stops below that. So sell side liquidity was purged with a drop down at essentially 940. And the 40-30 level was the objective I gave you over the weekend before the market started trading, and I prompted everyone live on Twitter. I stated that's my next level of interest. I'm sidelined early on. I said, there's nothing really exciting to do. You just have to wait. So we waited for the 9:30 opening, which is exactly what I prompted everyone to do on Twitter. And we seen sell side taken out, and then the market rallied up. Now, you're probably questioning,
where's the break of structure, though? That's what I don't get.
Why am I using that fair value gap? Well, I'm using an advanced model, and because I'm expecting expansion, I'm not looking for a trending day. I'm just looking for an expansion up into the 40.
He's using an inverse fair value gap.
30 level, which would close in the range from December 14th's closing price on the daily chart for ESH2023 on TradingView. Drawing that level out on your chart, you'll get essentially 40-30. So I'm outlining the reason why my stop loss is below the mean threshold of the down close candle, the most closest to the 940 low. Okay, so the middle of that candle, that's where I have my stop below that. It should not go back down there. Why shouldn't it go down there? Because we've taken stops at the 920 low. And your time should always be set to New York local time. Otherwise, you're not going to be able to track me on the recordings. So you can definitely see the volume imbalance. And I'm just getting some measurements here. Nothing's really lining up with
interesting
specific levels I like. So my attention primarily is focused on the 40-30. So I'll be taking the bulk of whatever I accumulate in longs off at 40-30 or higher. Right now I have 8 contracts long. And the stop loss is based on a $100,000 account. So if you were funded with a $100,000 trading account, the risk on this trade is 1.2%. But I'll be aiming for about 8.5 to 10%. 10%. That's the goal I'm reaching for, percentage-wise. So now I'm giving you a reminder that while you're watching price, you want to be looking at it through the lens of 5 handles each. Every increment move in 5 handles, because you want to train your eye, and if you're turning back to that volume imbalance now, I'll come back to that in a second since I'm done figuring out how I want to put the text inside this rectangle. Obsessively compulsive. Now 5 handles is the equivalent of a move from 4,025 to 4,000.
So a handle looks like a handle is the same as a point. I don't know why he calls them handles, but looks like they're the same as a point. So anytime someone says handle, it's the same as a point. But I thought handle was for Forex. So anyway,
20. That's 20 ticks. Okay, in terms of money, if you were trading one mini contract of ES,
20 ticks, 5 handles. That makes sense. 0.25. So there's every 0.25 is a tick, and then every 1 is a handle. I'm pretty sure. I thought it was a point, but I don't know.
yes, that would be equivalent to $250, or one handle being $50. profit or loss. So you can see we returned back down into that volume imbalance. There. Don't worry, I'll get the next pass down. Now I'm thinking I want to see it have speed and distance through the high that's already formed. It's already banging around here, and I'm going to look to bring that stop up a little bit, but it has to show me reaction at the volume imbalance, which I'm annotating right now. And again, a volume imbalance is my concept of identifying an area where there may or may not be an overlap between two candles with their wicks, or a wick, like we see here. Like the candle right to the right of my entry, that up-closed candle, that's the candle I'm looking at that turns that wick in the very next candle. It opens higher than the previous candle's close. So I'm to that little trend line, a little segment right there. I'm focusing on that. Now, if we drop down the midpoint, there you go. I'm looking for that as an entry. I'm trying to time the move of the wick prior to the candle it's trading right now. I want to buy it as it's heading towards the volume imbalance. It may or may not touch the volume imbalance again, but I'm trying to trade as the candle's going down. Notice that.
So
I'm entering long on down close candles or down candles,
Looks
and I'm taking
like
profits on longs in up candles. That is the market efficiency paradigm that I teach. All right, so now the risk has been elevated to 1.3%, which is minuscule. And I'm going to be looking to raise the stop up, but if it gives me another opportunity to go long, one more pyramiding entry, I'll take that. But I'm focusing on the high formed around the 930 right there. I want to see speed and distance, how fast it can get through that high, because I'll be judging that based on its willingness to get through that 40.23.5 level, which is the morning session high. Now the candle I entered initially on inside the fair value gap, that shaded blue, that fair value gap's high, I have that level in my mind as a potential area where it can revisit that. I don't believe it's likely to do that now because we've traded through the bodies of the swing high that's in price right now. So 1, 2, 3, 4 candles back from where it is right now. Because it's done that, I feel confident that I can have my stop loss below the low of that retracement of the big down close candle. I don't have the timing.
That's crazy.
To tell you, but where I did my second partial entry to the left of that down close candle, I want to have my stop loss below that low because it will not return back into the fair value gap now. So the volume imbalance should keep price at bay because there's an order block when I entered in on initially during the fair value gap. So now I've removed risk, and because it's spending too much time below that low at 930. So we have a dealing range that it's operating in between the 943 candle and present in 930 high. So it can bang around in here, and I want to see it move aggressively through this high. I want to see speed, not just poke its head above it. Otherwise, it could potentially come back down in and retest that volume imbalance, which is essentially fine. It just runs the risk of, if there's some kind of static price action, it could stop me out. But right now, I feel confident where my stop is. That down close candle is a
I would
bullish order
take at
block
least one off
just
here,
to the left of my
right?
second partial entry. That entire range, we can use that to go long another partial to build up the position, or it could be a independent entry all together by itself. And my mind is, we've pierced that 930 high. We haven't done it with a great deal of energy. So I'm thinking right now, it could potentially trade back down to the order block. So I'm looking at taking off 6 or half of the position I have on if it can run to 40.30.
I'm surprised he's not taking some off here.
Any retracements here going lower, I'm not looking at the fair value gap that you might be seeing 2 candles back to the left. I'm looking at the down close candle, keep going back to the left a little bit further where it traded into the volume imbalance. I'm looking at that down close candle where it might want to come back down into that and accumulate more long positions. Because remember, the stops have already been cleared at 920, slow at 940.
So the key with
I'm
this
trusting
entire
that.
thing is this is a market maker buy model. We sweep out the low, get displacement of our value gap forms. We get more displacement of volume imbalance forms. Yeah, first enters on the fair value gap, second enters on the volume imbalance, and we're drawing higher. That's the key. Is he's basically saying when we sweep out this low with the displacement with this fair value gap, enter on the fair value gap, enter on the volume imbalance, and then we continue higher to go to buy side.
Idea that unrealized objective or premium array at 40.30, which we talked about before the market opened and started trading this week, is still a viable target. Now that's not a buy there because even though we dropped down into what would look like a volume, fair value gap, I'm taking your attention to this down close candle right. I'm dropping it wrong here. There it is. That right there is my bullish order block. Okay, so I'm focusing inside that candle, and I will look to participate on the upside move from that candle as well. Okay, so I went long as we entered into about the midpoint or mean threshold of that down close candle. And I'm trusting, all my faith is now on the volume imbalance, because price should not go back below the volume imbalance. It can touch the top, it can touch the bottom of it, but it should not pierce it. Now, contrast this rationale and thinking with Forex, because you would get smoked if you had your stop loss like this, because it's rigged. Your broker is going to cannibalize you. I don't care what anybody says, okay? They will cannibalize you.
This is crazy.
You can't trade this precise with Forex. It can't happen.
This is why, personally, if I was him, this is why, personally, I'm taking off all here, or most off here. Man, this is... He's, like, really smart, or, like, I don't know, or something, because I would take all off here. Looks like we're retesting this volume imbalance. I don't know. Maybe he just has really good conviction in volume imbalances, I guess. I don't know.
Because they will snatch you. Futures is a much cleaner and more professionally managed asset class. Beautiful retest of that. Look at that. And my stop loss is just still at that low on the low candle prior to that run above the 930 high. So right now it's showing that my stop is negative for $225. I'm going to correct that. And I want to see it leave the order block level I have outlined here with the plus OB is annotating it's a bullish order block. So we're inside that entire candle, and I'm expecting it to accumulate more smart money longs. And then after a measure of time, the algorithm will reprice higher, and you'll see. I'll tell you when I'm looking for it. But right now, buying is not making this go up. That's not what's going on. The algorithm's holding price inside of that down close candle that I've identified as a bullish order block. And now I'm stating that it needs to make a new high and go above the 930 high and the higher high that it formed just a few candles back. But it needs to do it quickly and strong. There's a small little city, which I'll annotate, and that level needs to be breached. And this is a trigger. It'll tell me when the algorithm will start firing aggressively and spooling price. It's not because a buyer's coming in. I'll tell you exactly the level it's going to have to break before you start seeing it accelerate to the upside. This is a signature that's unique to me. Once it takes that candle's high out, it should accelerate and not trade below the lowest open or close of the swing low that's already in place right now.
Inversion for value gap.
Notice where my stop loss is. It's at the low of the volume imbalance. There's the one order block right there, but I'm not going to draw it out. Right there, it's touching the order block. And once it takes that level where it says needs to rip through, once it does that, the algorithm will start spooling aggressively and repricing higher. It matters not how many buyers are coming in, no matter how many sellers are coming in, it's going to rip through that level and then reprice to where the buy side is, which is above the high formed at 953 or so, 954. And here we go. Acceleration, like gas.
Whoa! That was crazy. That was crazy. He just called that.
And then your focus needs to be at that 40-30 level. Now, because I have 14 contracts on, I'm going to take 9 off. I'm going to have the larger position off. I don't see a continuation on the upside. That's why I want to take the bulk of it off here. And I'm watching how we stay above the high that was formed at 930 and 953 or so.
That's crazy.
Now, how many times did it move 5 handles in all of this price movement in the direction that we were looking for 40-30? Several. 1, 2, 3 times. Each one would potentially accumulate to 15 handles for the day, which is what I'm essentially going to be getting here shortly anyway. Should get down to a mitigation block. It should accumulate new longs and accelerate through. And I have set to take 9 off as soon as it prints above 40-30. There's a macro in price that takes place between 950 and 1010, and that usually causes a price run, and liquidity and or inefficiency will be retraded to. And now because I'm inside the narrative correctly, I've outlined it this morning, told you what I was looking for. You're watching me execute here. The logic as to why it's going on. And once it starts to rip here, and sliding on into home, rookie sensation ICT delivers it once again. 9 contracts off. Now because it stalled like that, I ended up hitting it again, and it puts me short now, 4 contracts. So I hurry up and close that because I was wondering why it was lagging. So $10,400 in one trade, one run, risking no more than 1.3% of the account. Highly precise, very specific ideas, aggressive and next level superior stop loss management. And I think one could agree that this was pretty insightful. Until next time, be safe.
That's so cool. So that's the end of the video. I'm going to take another break. I don't know if anyone's watching right now. Probably not. But yeah, I'm going to take another break. And then I'm probably going to keep watching because I don't know. I don't really have anything else better to do right now. Oh, what's up, Hyper? How's it going? I just finished this most recent episode, episode 9. So I'm on episode 10 now, and I'm gonna take a break. I'm gonna end the stream, and yeah, I'm gonna come back for episode 10, and I'm locked in. I'm kind of wanting to watch every single ICT video that exists. I think that would be, you know, I want to get good at this, dude. I want to get good. So anyway, I am gonna take a break, and I'll probably come back in a half hour, an hour.